Four key factors to consider before you invest in real estate.
So what now is regression and progression? So regression is when you have a higher value property and it is affected by the surrounding properties of a lower value, and it causes the higher value property to decrease in value. So an example of this might be a neighborhood that is deteriorating and the homes around it value are going lower. It will cause the higher value property to decrease. On the other hand, progression is the exact opposite. It is when you have a lower value property that is affected by the higher surrounding properties. Their values are higher, and it causes the lower value property to come up. So, an example of this might be when you have a home on a modest lot, and it might be a modest, small 2-3 bedroom house, but this particular house is surrounded by uh, bigger lots and bigger homes of a higher value. Because of this, it caused that modest value property to come up. So when you understand regression and progression, it will make you a smarter real estate investor, and you will be able to forecast better returns on your investment, or when you ought to sell an investment property based on regression and progression. So highest and best use is all about maximizing a property's value and potential. The highest and best use for a property is the most profitable, legal, and feasible use of a property. So it's all about finding the optimal purpose for that property that is going to generate the greatest returns. So different factors that you want to consider when you're thinking about highest and best use are things like location and zoning laws, market demand, the financial feasibility when it comes along with this property. Each property has its own unique characteristics. So land itself is unique. That's one thing that you will learn. So each property in itself has its own unique characteristics and influences that you need to consider. So it's all about unlocking the property's full potential. That's what highest and best use is about. It is strategically planning and looking to see what is the best use of this property and how am I going to maximize the greatest return for this property. Policies and regulations from the government can significantly impact a property value and also the investment opportunity that is there. So you really need to look into these things before you purchase an investment property. So different governmental influences could include tax incentives, zoning laws, infrastructure projects. Each one of these can create their own opportunity and also pose its own problem. Understanding what is being implemented in the area or the laws that are being changed really will help you become a successful investor. So interest rates can impact your financing options and also impact your investments profitability. So you want to consider this factor as one of those key factors when it comes to investing in real estate. Choosing the right type of mortgage is essential. There are different type of mortgages. So a fixed rate mortgage offers more stability and with consistent payments, while an adjustable rate mortgage can start off low, but it can increase over time. So you want to be aware of the type of mortgage and the interest rate that you are applying for or that you're going to be using. Interest rates are influenced by different factors. So, economic factors such as inflation, the Federal Reserve policy, overall economic growth. So, staying informed about these factors can help you anticipate rate changes. So, be aware of this. Understanding how rates work and their impact on your investment is really going to help you make an informed decision and optimize your real estate strategy.